What's going on, guys? It's Mr. DEBT, Joe Lorick from the Money Etiquette Group. Look, I want to really quickly talk about building wealth. Okay, a lot of people have been asking me lately, look, I'm 35 years old, I'm 30 years old, I'm going into my 40s, I'm 45 years old. How do I build wealth with so many expenses? Okay, I'm building a family, I'm taking care of my kids. I don't have room for savings. I might be doing this by myself as a single parent, or some people are doing it as a couple and still they're not having enough. And you want to know, how do I build wealth in this situation? Is it through 401ks? Is it through IRAs? Is it through just investment accounts? Is it through the stock market? Is it through flipping homes? How do I do it? Do I have to start a business? How do I do it? That is the number one question that I get from this demographic. And look, guys, I'm going to give you the same answer I give everyone else. It's a simple answer. Okay. The fastest and most effective way to build wealth is to reduce or eliminate your largest expense. Reduce or eliminate your largest expense. What is typically your largest expense? Your rent or your mortgage. The faster you get away from paying rent or having to make a mortgage payment, the more of your money you can retain for investment purposes or just saving purposes with a guaranteed interest gain. Here's what I mean by that. A lot of people are like, well, how do you do that? That doesn't make sense. Well, I'm going to break it down really simply about the time frame in your life when it's most ideal to do so, okay? The time frame in which is most ideal to eliminate your mortgage or get away from what you're paying in rent, or at least reduce it so that you can eliminate it more quickly. It's when, if you have children, your children are in high school. And some people are like, well, why? I don't understand that. Why would it be when they're in high school? Because look, I work in real estate, and I can tell you, most people, when they're looking for homes and they're starting a family, they're looking for areas with great schools. So they overpay to live in certain areas based on, okay, low crime rates, some of that's there, but it's more about great schools because they want their kids to go to schools without having to pay for private schools. So they want to go to good public schools. Well, you start to lose that benefit once your children are in high school, because usually, okay, when your kids go to high school, they're not going right around the corner from your house. So the reason you moved into a neighborhood and overpaid was because you wanted to be near the best public and free elementary and middle schools, which for some people, if they don't understand that, grades kindergarten through 8th grade. So that was the benefit. Once that benefit is no longer there for you and your family, what's the point of staying? This is the point that most people should cash out. And I'm not saying cash out to upgrade. This is when you cash out and you acquire a mortgage, if you're into buying homes, that you can pay off in 10 years or so. If you were to pay the exact same amount that you were paying in your $230,000, $240,000, $250,000, $260,000 house into a $150,000 house, in 11 years, you would be mortgage free. You would own a home mortgage free, debt free. And for many of you, when I said, okay, your children are in high school, let's just say this occurs for you when you're in your 40s. Some people, this happens when you're in your 30s. But even if this happens to you when you're in your 40s, in another 10 or 11 years, you'd be in your 50s. So let's just see the setup here. You're in your 50s. You only have to pay taxes on your property. Okay, you no longer have to make a mortgage payment. You're not renting. You own. So you have an asset that's worth something, but even if it depreciates, you still have an asset that's worth something. And you're not paying out a mortgage payment. So that $1,700 a month that you were paying out, now, guess what you get to do with that? You get to build wealth. If you choose not to suddenly upgrade, if you don't chase, I'm going to go live in the suburbs now in a $300,000 home. I'm going to get this $400,000 home. No, we're talking about building wealth. When you don't come from money, when you don't have an inheritance waiting for you, when you don't have family members giving you $10, $20, $30, $40, $50,000 to pay off your student loan debt, to invest in your business, when you don't have that money, okay, the best way to build wealth is to eliminate your largest expense. Because it doesn't take miracles to do that. It doesn't take tricks in the stock market to do that. It doesn't take the economy going in one direction or another. It just takes discipline, because it's basic math. The faster you pay down your mortgage, if you have one, the faster you own a home. The faster you get out of a home where you cannot realistically pay off the mortgage, the faster you can move into a home where you can pay off a mortgage in 10 years. The faster we get away from being fancy when we don't have to be, the faster we will build wealth, real wealth. Take care of business now, guys. That's the key to wealth. Okay, it's not a mystery. It's straightforward, and that was free. Don't forget to subscribe to the channel. I got more good content coming to you guys. Check you later.